we're starting to see a new asset class emerge
Bitcoin,
as a safety net.
cryptocurrency.
Sure, yeah, you can go into treasury bonds as a hedge against risk from the stock market, maybe, having less returns because of inflation, or you can go into cryptocurrency, aka Bitcoin, which has seen an amazing spike in price this past month. I mean, we got to $42,000. That is amazing.
It is quite fantastic.
Granted, it's still considered a risky asset class, but I mean, as more institutional money enters the space, the more legitimate and credible it becomes. And so the spike in Bitcoin right now, at least me and Peter believe, is a direct result of all the stimulus that we're injecting into the U.S. economy.
Right.
Because the U.S. dollar is the it's one, or if not the strongest currency in the world. So as more money enters the markets, more U.S. dollars enter the markets, more inflation happens, the value of the U.S. dollar will decrease, and people are going to start looking for other asset classes that, won't deem their currency worthless, aka Bitcoin is one of those right now. Why? Well, there's only going to be 21 million Bitcoins in supply ever. So, I mean, if you don't know supply and demand, that's one of the...
But the beautiful thing is that no government, no one thing or entity can determine otherwise. Like, there's no way that someone can say, let's print more Bitcoin because the world is dealing with a pandemic or something, like there's no way that could ever happen. So it's a bit ruthless, but it's what is required for a currency. I mean, or for anything that is a scarce resource, say for example, like gold or real estate. There's only a certain amount, and therefore the demand, if people want it and people find use in it, then the price will go up, evidently.
So if it's just like gold, why don't people just buy gold? It's less risky. It's tangible. It's there. It's been around for years. Why are we getting into Bitcoin?
Well, tangibility is also a blessing and a curse in a sense, because we are kind of doomed to being robbed if we have a lot of gold on us and we're traveling, or even if we have it in our homes.
Oh, sorry, my pants are sagging. There's just a brick of gold
it's
in
like
my back
a bunch
pocket.
of gold on you or whatever. And with crypto, and the great thing about gold is that yes, it does. People do want it. People will take it as money, but it's just very impractical. But the thing is that people want it and it's scarce. The great thing about Bitcoin, adversely, is that more people are interested in it because of, say, the 21 million Bitcoins that are ever going to be printed, but also in its reliability to make transactions possible online without having to deal with the possibility of fraud or actually just fraud. I think fraud is a big one, where if I send you money and then you say, hey, I didn't get it, I need a refund, kind of like the age-old problem that Amazon faces with fake returns. They can't necessarily prove you're a liar without making themselves look bad, because they want to please their customers. So Amazon is willing to lose a ton of money to look good in front of their customers overall, to give their at least the honest customers a great customer experience.
Hey, I didn't get my new Xbox in the mail. It's supposed to be delivered today, but it's not on my doorstep.
And then Bitcoin and all the accountants and ledgers and the blockchain that track every transaction will call you a complete liar for saying that you didn't get your Bitcoin or your Xbox. And so there's a lot of many other use cases that can function in Bitcoin. But for those of you, I mean, if you're listening to this pod, you probably know a bit about Bitcoin, and that's probably why we could segue into something like Ethereum. Why Ethereum is so valuable. It's the same use case.
It's the second runner-up, really, in market cap and market share of cryptocurrencies, and it's unique because, I mean, well, one, it has an actual, known CEO. I don't know his name. It's a really long, intricate name.
He wears unicorn rainbow shirts and things like that.
Yeah, and it's it's different from Bitcoin because it focuses mainly on smart contracts, and that's a whole different podcast.
But it's the same. But it's the same thing in the idea of like a trustless system where it's like if we form a contract and I said I'm selling you this piece of real estate, you can't go ahead and said I never got it. Well, it's even harder for real estate. But let's say for an Xbox, you know, if I'm selling you an Xbox and I send you a smart contract, like there are kind of some ways to validate that you did receive this Xbox through many different points in the supply chain, whether it be me saying that I sent it to USPS, USPS are saying that they got it, and then all these multiple different channels, you know, basically seeing that this transaction went through.
It's a supply chain on steroids, essentially. I mean, it's going to improve
a
lot of different industries.
More importantly, it's for the online world, online kind of transactions. Now, granted, there are still some hiccups, but these the use cases are very much unique to online transactions, online contracts, because at the end of the day, people can falter and they can find a way to say, well, I got, you know, I might have got the Xbox, but I got robbed, or there's no way of, you know, I don't know what there is, but in a sense, but only time will tell for how efficient Ethereum can be. And also time has shown, you know, in the past year, how efficient Bitcoin can be. Unfortunately, it did take a dip though.
Yeah.
And I see it as a buying opportunity. Don't listen to me because you're going to lose money.
So
but
I think something that's worth noting is that this time around, at least compared to the 2017 bull run that Bitcoin had, where it got to almost 20K, this time around, we have a lot of institutional investors putting in millions, if not billions of money into Bitcoin. It's I saw this recently. They called it business FOMO, which is the fear of missing out. Back in 2017, we just had regular FOMO, just, you know, us regular folks FOMOing into Bitcoin, and that got it to 20K. But now we have business FOMO, where it's just a bunch of businesses and financial institutions getting in because they don't want to miss out. I mean, you have JP Morgan predicting the price of Bitcoin to go over 140K. They're not saying that because they don't have any Bitcoin. They probably have a large amount at stake. So
yeah, and psychologically thinking about it, if they get that message out there, they're a credible institution.
Right.
They're trying to pump the price of Bitcoin. I mean, there's a long period of time where the top CEOs, like Jamie Dimon, for example, they would say, "Oh yeah, Bitcoin's trash," or Mark Cuban, "Oh, it's trash," and then they're suddenly taking Bitcoin and investing in it, and you know, it's almost as if it was like a concerted effort to make the price go down as much as possible.
Yeah, because they have clout. I mean,
they do,
and they know that if they talk, you know, bad about a product or something or an asset, that it's going to go down because people are listening to them. That is their, you know, entryway into that, because they've just decreased the price. I mean, granted, that's illegal if you do it very directly, but indirectly they're able to pull it off.
Here's just like a quick little fact before we end it. If an Olympic-sized swimming pool has a volume of 2.5 million liters, and we divide and get our answer, ultimately 3.27 swimming pools hold the entire global supply of gold that has ever been mined on Earth.
Wow.
Yeah, that was a very tangent kind of segue, but I just want to let you know that there's 3.27 swimming pools, Olympic-sized swimming pools, that hold the entire supply of gold ever mined on Earth.
Gold doesn't have a CEO.
It doesn't.
Neither does Bitcoin.
And everybody likes it.
Yeah.
It's interesting. It's like, oh, it's so shiny.
That's a pattern right there.
And
gold
it's useful.
Does not have a CEO. Well, anyway, thanks for listening, folks. Just a quick little shout out. We have a Redbubble store up and running, and we're selling some merch on there.
Yes.
If you like the show, you like hearing what we say, you know, feel free to support us.
And don't act like you don't have the money. You're about to get a $2,000 stimulus check coming in March. We need you to at least get one for your friends, your family, your mom, your dad. Get them to listen to the show. Thank you for listening.
And we're not financial advisors.
You will lose money.
Goodbye.